Sandy, when you take a road trip, you own a Rivian. But I noticed when I visited over Christmas break, you had the Tesla Model 3.
And the reason for that is because my wife says we will never, and that was a big word, never. My wife is a doctorate in engineering, 2 master's degrees, and she graduated from GMI near the top. Yeah. My wife is an engineer's engineer, and she said we will never, never take a road trip in anything but the Teslas. That's hard words.
That was Sandy Munro spitting some facts. Make of them what you will. Believe it or not, that will be the least nerdy thing in today's video. We are going deep, looking at numbers, data, and also future projections around EV adoption, declining battery costs, and loads more. By the end of this video, if I've been successful today, you'll have a much clearer understanding of how quickly the EV transition is happening, how inevitable it truly is, how cataclysmic the transition will be for internal combustion engine vehicle manufacturers, aka legacy automotive companies, and how ridiculously low battery costs can decline as EV production scales up, making EVs truly affordable to the masses. And if you like numbers, how about this? 273, the current number of exclusive videos available on Patreon, which is counting rapidly. If you're not a member, you are missing out. You can join with the card in the corner or the link in the pinned comment. This first chart is called Why Tesla is Doomed, at least in Australia. As we can see here in 2022, on the left, a huge collapse in sales. That's 2014. Oh, it kind of looks like the... I wasn't expecting that. I thought the competition was coming and Tesla was losing market share everywhere. This, I mean, maybe this is fake news. I haven't done my fact checking, but this seems to indicate that when Tesla makes more vehicles, they sell more vehicles. Maybe that's why I keep seeing Model 3 everywhere in Australia, and now Model Ys as well. Now, in fairness, these are very small numbers, but it kind of paints a pretty clear trend. By the way, guys, if you don't know, yellow and red, they're coming from China, Tesla's main export hub. Just pointing that out to the few people who don't understand this. There's a lot of people, for some reason, who relied very heavily on China domestic sales. How many vehicles made in Shanghai were sold in China this quarter? Who f***ing cares? How many vehicles made in Shanghai were sold on planet Earth this quarter? Is the question to be asking. Of course, this is definitely the exception to the rule. We're not seeing Tesla sales increase everywhere like this, are we? Wait, we are? Oh, I should have done some fact checking before I started this video, shouldn't I? Obviously, things in the United States paint a very different picture. We're looking at the top 10 cars sold in the United States in 2022. As we can see, sales down across the board, including Tesla Model Y sales down 32. Oh, they must have, hang on, there's no minus sign there. Must be a typo, right? There's no possible way that the Model Y would have increased units sold by 32%, and basically every other vehicle in the top 10 in the US actually saw a massive decline in their sales. The Ford F-Series down about 10%, Silverado down over 1%, Ram pickup almost 20%, Toyota RAV4 down 2%, Toyota Camry down 6%. There's no way the Model Y is right on the arse of the Toyota Camry right now, is there? Oh, it turns out there is. Honda CR-V down 34%. This obviously is fake, right? It's not real. Couldn't be real. There's no way that's real, because that would suggest that sales of internal combustion engine vehicles are currently collapsing. See? Minus. And sales of compelling electric vehicles are skyrocketing. Limited only by production. Anyone care to guess what this looks like for 2023, about a year from now? I think the trend will continue. Model Y is going to be close to the top with very positive year-over-year growth, and just about everything else negative. Once again, you can count on it. This is something that most investors seem oblivious to. Most legacy automotive manufacturers seem unwilling to say out loud, or they don't even realize. Right here, we are seeing the collapse of ICE sales in real time. Across the board, sales down on just about everything. I mean, literally, the top 10 vehicles in the United States, all of them saw a decline in sales year over year, except Tesla's Model Y. Considering production of Model Y is still massively ramping up, just in case you don't know, the very first vehicle Tesla's producing at Austin, a gigantic factory, is the Model Y. These are all currently Fremont-produced vehicles. You know what's going to happen when Austin ramps up Model Y production, right? This thing is going to rocket up the list. There's 2 trends I want you guys and girls to pay attention to in this video. 1, the exponential increase in EV sales. We saw Tesla Australia. I mean, that is a beautiful S-curve increase in deliveries. And the simultaneous collapse of ICE vehicle sales. People don't get this. They still don't get this. There are analysts today, just a week ago, some dickhead, oh, maybe Tesla sells 5 million units by 2030. Are you kidding me, dude? You got dimwits like Dan Ives saying that maybe 20% of all new vehicles sold in the US in 2030 will be EVs. And now, some more data points. This from Sam Kouros of ARK Invest. Overall, China passenger car retail sales climbed 1.9% from 2021 to 20.5 million. But that's not the full story. Battery electric vehicle sales increased roughly 50%. While internal combustion engine vehicle sales decreased nearly 6% year over year. By the way, Isn't that curious? Tesla's long-term publicly stated goal of increasing their vehicle deliveries by approximately 50% average rate over a multi-year horizon, and we're seeing EV sales in China increasing year over year approximately 50%. This is pretty stunning. Tesla's goal is to grow approximately as fast as the entire overall EV market does. Let's have a closer look here. On the left here, a 1.9% year-over-year increase in total vehicles sold in China, just over 20 million units. Battery electric vehicles, however, increased 50% from less than 3 million units to over 4 million units in a single year. Now, just bear with me, folks. I'm not very smart. Can someone tell me in the comments below how many vehicles in China will be electric if they increase in sales 50% again from 22 to 23? I'm really bad at math. What's 50% extra on top of 4 million? It's extra 2 million units, right? I wonder who's going to make those extra 2 million electric vehicles that'll sell in China next year. And more importantly, we're seeing internal combustion engine vehicle sales beginning to collapse. I really want to underscore this. We see a 5.8% year-over-year decline in internal combustion engine sales in China. That's not the full story. This rate of decline is going to increase. Take an S-curve, flip it upside down, bam, we're looking at ICE sales. They're going to collapse at the same rate that EV sales exponentially increase. People are not getting this. Toyota still thinks they're going to be making ICE vehicles in 2035. Most automotive manufacturers, even the more aggressive, are still planning to be making internal combustion engine vehicles as late as 2030, but no one's going to be there to buy them by then. These are two things to pay attention to in the coming quarters and years. EV sales increases year over year, and internal combustion engine vehicle sales decreases year over year. It ain't going to be pretty for ICE. And now onto US sales, keeping in mind the EV numbers are preliminary. They're probably going to be close to the mark, but just for the record, they are preliminary figures. In the US, total vehicle sales were down 8% year over year, but battery electric sales were up roughly 46%. Oh, isn't that funny? In China, EV sales are up 50% year over year, and in the US, they're up 46% year over year. It's almost as if year over year, EV sales are increasing roughly 50%. I mean, holy shit, what a coincidence. Who could have seen that coming and planned for it and be publicly saying that's what they're aiming to do themselves? That means internal combustion engine sales were down 10% year over year. Once again, check it out. Total vehicle sales declining 8% in the US year over year. Battery electric sales up almost 50% in a declining market. And importantly, the internal combustion engine vehicle collapsing by 10%. And once again, this rate of collapse on ICE sales is going to accelerate. But don't tell that to the morons like Mary B. Esparra, who led, and it matters, led her company to bankruptcy, I'm looking forward to the day that GM goes bankrupt and the government bails them out again. I think it's fair to say you can probably count on that happening later this decade. The bankruptcy is inevitable. The bailout is the one that I'm not 100% on. I'll give that about 95% chance. You did it, Mary. You took money from us again after going bankrupt, you incompetent CEO, and it matters. And now onto a great tweet thread from JPR007 on Twitter, who you should all be following. Stick with me. Things will make sense in just a moment. Batteries for battery electric vehicles. The historical volume of batteries for battery electric vehicles is well known, because it's already happened. We projected it forwards based on our model for Tesla and the battery electric vehicle industry as a whole. We show here a time horizon of 2030. We assume an average battery size of 50 kilowatt hours per vehicle. For the record, I think this is reasonable. In fact, it may actually be a tiny bit generous, depending on improvements in vehicle efficiency, how many smaller vehicles, low mass vehicles are sold, etc. How many vehicles are specifically designed to be robo-taxis and maybe they don't have super long range, but they charge more frequently. This could be as low as maybe 35, 40 on average, but I think 50 is a pretty decent estimate. So let's check out the model. What we're looking at here is projections for demand for the number of batteries in terms of gigawatt hours going in all electric vehicles globally out to 2030. 2023, we're at an absolute spec, not even close to 1,000 gigawatt hours. And by 2030, in excess of 5,000 gigawatt hours. This is an enormous amount of growth. Does anyone know any companies that makes batteries, that figured they'd need a lot of batteries, that has been trying to think about how to make batteries at scale and drive the costs down? And does anyone know any companies like that? I mean, if there were any companies like that, I think they might have a very large opportunity ahead of them. Another way of looking at this on a log chart, again, the same 50 kilowatt hour average per vehicle. On the side here, we're moving up by factors of 10. It's important to understand if these projections are even close to the mark. The more you scale up a technology, the more of something is being produced, the lower the costs overall for many reasons, including innovation, economies of scale, and more. Number 2, batteries for energy storage systems. Again, we just looked at vehicles only, not storage, just vehicles. We use known starting volumes of Tesla energy storage systems and estimate for the entire battery energy storage systems industry. Tesla estimates that total battery energy storage demand should reach around 10,000 gigawatt hours by 2030 from 25 gigawatt hours in 2021. Tesla intends to supply 15% of that. Now, just to refresh your memory, I'm going to switch between the vehicles only plus the storage stuff, so we can see on screen now the difference. Same scale, same years, everything's basically identical, so you can watch the bars move. Check it out. Vehicles, not even 6,000 gigawatt hours per year in 2030. Storage, around 10,000 gigawatt hours in 2030, meaning combined, by 2030, we're looking at about 16,000 gigawatt hours of total battery storage needed, including electric vehicles and stationary storage. If you can't read between the lines, this is a gigantic opportunity. If only there were some companies out there who developed their own battery cells, had a huge lead on this, were innovating in terms of cathode, anode, manufacturing techniques, cell design, form factor, and so on. If only such a company existed, they might do rather well. If anyone knows any companies like that, let me know in the comments below. I might buy some of their stock. And now looking at this in log form, for those of you who don't know, if you see an almost straight line on a log scale, you're looking at perfect exponential growth. P.S. Last I heard, Tesla already had approximately $40 billion worth of orders for their megapacks. Just wanted to put that out there. 3, battery industry demand. This is just a combination of the two we just looked at, battery electric vehicles and energy storage. We see an overlay here in blue, battery electric vehicles, in green, energy storage on top of that. I really want to emphasize, orient yourself. Currently at 2023, a tiny little speck we can barely see, and a beautiful exponential curve, huge increase. The question is, once again, are there any companies out there who may be well positioned to take advantage of this enormous growth by producing and supplying these batteries and also making electric vehicles? If there are, they're literally sitting on top of a multi-trillion dollar opportunity. I just wish a company like that existed. Once again, log chart, same shit, an almost perfect line. Clean exponential growth. We ain't done yet. 4, battery industry accumulated experience. This is where things get very interesting, particularly around costs and EV adoption, so pay close attention. As the battery industry grows to meet this expected demand, we can calculate its accumulated experience over time by simple addition. This allows us to determine where the industry should lie on its experience curve at any point in time. And just a few notes on these before we look. The experience curve is generic. JPR and Co have assumed a 75% curve, meaning the price and cost fall by 25% for every doubling of accumulated experience. If I recall, ARK Invest used Moore's Law approximately 20% for every cumulative doubling. So in the same vicinity, this kind of experience curve price and cost behavior has been observed in numerous industries over time. And although they show the curve as a single effect, in reality, it is comprised of numerous curves coming down in numerous ways for different products at different companies in different factories and even on different production lines. Tesla itself is a living illustration of the experience curve in action, from Fremont to Shanghai to Austin and Berlin, and from Model S to Model 3 and the Model Y. Again, just look at the cost of the batteries in the Model S to 3, the cost to produce the original Model S, the cost improvements, the speed improvements, etc., the new efficiencies from factory to factory, from Fremont to Shanghai to Austin and Berlin. And one final point here, scale is a major driver of these experience curve economics, so capturing larger volumes in the market is generally important for cost and price leadership, and this generally leads to higher margins, as illustrated below. We'll get to this one in just a moment. Accumulated battery electric vehicle plus battery energy storage battery experience. This is defined as the total cumulative production in gigawatt hours. And now the big one. You made it this far, here's your reward. Battery industry price and cost experience curve. So let me orient you guys and girls on this chart. On the left, again, log chart, price and cost index. Along the bottom here, accumulated industry experience in terawatt hours, again, going up by a factor of 10 each time. 0.1, 0.1, 1, 10, 100. And what we want to focus on is the blue dot in the center. This is the starting point right now with a value of 1,000. It's just an arbitrary number, so it's nice and easy to see cost changes from here. 2022 in blue at 1,000. In green, 2026. Now, if you're bad at math, it's 2023 now, 3 years away. Maybe almost 4 if you want to be generous and include the entire year. And what are we looking at? Instead of a figure of 1,000, we're now down to 488. In other words, the cost more than halving in the next few years. Please let this sink in. The battery is the single most expensive thing in an electric vehicle. No contest. The battery alone, many thousands of dollars. If the cost of batteries halve in the next few years, the cost of the most expensive thing in the vehicles halves in the next few years, meaning the cost of the vehicles can come down by many thousands of dollars in the next few years. At this point, EVs are now cheaper than a comparable ICE vehicle. Never mind, they're much cheaper to own and operate over the lifetime ownership. They're just cheaper at a sticker price, significantly cheaper. And guess what? It doesn't end there. In 2030, we're now looking at $225, roughly a quarter of the cost it was in 2022. Think about this. The cost of the most expensive thing in an electric vehicle plummeting by the end of this decade, about 1/4 of the cost it is today. Again, meaning the price of these vehicles can be thousands and thousands of dollars cheaper, meaning many more people can afford them. Again, a linear decrease in the price, causes an exponential increase in demand. This is one of the things that really does my head in. Ignorance of this fact. These numbers aren't going to be perfect, right? But the point is they're going to be close. The point is these costs will decline predictably and precipitously over time as production scales up. This is one of the key things that people don't get. This is why I want to claw my fucking eyeballs out when I hear people say dumb shit like Dan Ives the other day, thinking maybe 20% or so of new vehicles sold in the US in 2030 will be electric. Dan, bro. Hello, look at this, 225. Assuming this is close, this means you can make a compelling electric vehicle for many thousands of dollars cheaper than it is today. And that doesn't include any of the other cost savings. We're not talking about cost savings in terms of manufacturing techniques, ramping up EVs. Remember, EVs have so few moving parts that in theory, when this is a more mature technology, it should be possible for automotive manufacturers to make an electric vehicle for a fraction of what it costs them to produce an ICE vehicle, because there's so many more things in an ICE vehicle. Things equal cost. Less things equals less cost, I know. Simple, amazing, crazy, but important. EVs are a new technology, and this is the mic drop moment. I personally think these may be slightly aggressive estimates, but the point remains. My own estimate, for example, I'm expecting at the end of this decade, Tesla will be able to produce a vehicle equivalent to today's 3 or Y. Everything, features, functionality, performance, range, acceleration, everything identical for about half the price. This is how they get to and then exceed 20 million vehicles produced per year. People are not getting this. And lastly, just want to focus on this. Share of sales and share of profits. The short story here. The larger your sales as a percent of the overall market, the more market share you capture, the more profit you capture. No, it's not a linear relationship. The example here in blue, capture about 38% of the market in terms of sales, capture about 60% of the profits. And we've seen many examples of this. Apple's a great one. Smartphones. They capture most of the profits. They don't sell most of the units. They sell a decent slice of the units, but they have the biggest market share and they capture by far the greatest profits. We all know Apple is a literal money printer. And this is important for a few reasons. If there's any companies out there who today already have compelling technology, they're already leading the charge, pun intended, in terms of sales, they're already capturing the majority of the profits, and they continue to scale up their production and drive their costs down, you know what happens? This is what happens. And on the flip side, if you're a new startup or a legacy automotive manufacturer, for example, you're making electric vehicles, but you're only getting a tiny slice of the market, you get almost none of the profits. That's a big problem. Unless you have a bankruptcy fetish, in which case it's probably a good thing. Whatever turns you on. I'm hopeful this video, these numbers, these projections have given a little bit of clarity around how quickly this EV transition is happening, how fast the collapse of ICE vehicle sales will occur, how enormously the cost of EVs will plummet, dramatically expanding the market, and how important it is to have a first mover advantage. As I've said 1 trillion times, Tesla's lead is unassailable. They have won the decade. They're going to capture the biggest share of the market, the majority of the profits, and no one's catching up to them on technology, period. And Tesla is just getting started. Never mind the energy storage products. Of course, it's impossible to know exactly how things will play out, exactly how much costs will decline, exactly what time frame it will take for the costs to go from here to here. But one thing is for sure, very few, if any, of the so-called experts, especially the Wall Street analysts, have any idea that any of this stuff is even a thing, let alone that it's inevitable. It is unfathomable to me today to hear automotive CEOs thinking they'll still be selling ICE vehicles in 2029, 2030. You have to be high. It's straight up embarrassing to see research published by analysts thinking that less than half of all new vehicles sold globally in 2030 will be electric. And again, I mean, back to the Dan Ives example. I don't mean to rub it in, but the dude literally just said a couple of days ago on air that he thinks a little bit more than maybe 20% of new vehicles sold in the US in 2030 are electric. We're at a tipping point here. People are still asleep at the wheel. I don't know when the penny's going to drop. The EV transition is happening. It's done. And one final point. This is why it bothers me so much to see governments pissing away money, trying to force companies to do this, incentivize consumers to buy EVs. It's happening anyway. It is a commercial inevitability. You don't need to force people. The market's going to figure this out anyway. And I'm going to be wrong. As a Tesla investor, I'll take these dumb incentives. The US government wants to piss away taxpayer money. Fine. I mean, I'll take it. But it's completely unnecessary. This is like trying to incentivize people to start using smartphones or adopt the internet. I mean, hello. It's a done deal. It's just a matter of watching it play out. And I think the most important data point in the entire video was seeing that EV sales in the US year over year increased 46% and in China 50%. I did this example recently. We'll do it again. Last year, globally, 13% of all new vehicles sold were electric. If that increases by 50% next year, it's about 19.5%. Another 50%, 29.25%. Another 50%, we're over 43%. Another 50%, we're at 65%, and yep, you know where this one's going. Another 50% from there, we're at about 100% penetration. If, and this isn't a prediction, but if, just to illustrate the point, if between now and 100% adoption, EV sales continue to increase roughly 50% per year, in 2027, EVs would have approximately a 100% market share. I think things will taper off a little bit toward the end of the decade. That isn't a prediction. But to be clear, that's roughly the rate of EV adoption that I personally think is going to happen between now and roughly 80% market share. But don't tell that to the automotive manufacturers or the Wall Street analysts. If I've got nobody to point and laugh at, what am I going to make videos about? Lastly, don't forget to head over to Patreon. 273 exclusive videos and counting rapidly, plus my Tesla stock price targets and optional access to my Tesla valuation model. And yes, believe it or not, these cost curves, industry experience, EV adoption rates, collapsing ICE sales are all things I've factored into my Tesla valuation model and my price targets, which may explain why they currently seem super absurd and in a few years' time will have probably aged relatively well. Of course, I do put my money where my mouth is, literally. Still buying Tesla stock with literally every spare cent. So, see you over on Patreon. Love ya.